You've had a little bit of success in trading. Maybe you're knocking down some profitable trades. You're seeing green days, green weeks, maybe even green months. The next question that I always get asked is, when do I start to scale up? When do I add size? When do I take bigger positions? Today, I'm going to talk about the 3 things you should take into consideration before scaling up. Hey everyone, League Trainer with Stocks to Trade, Tim Bowen here. Be sure to like, subscribe, and share these videos with your friends. And also, if you're on YouTube, ring that bell to be notified as soon as we go live or drop a new video. And then also, if you're enjoying these videos, if you like the podcast, if you like pre-market prep, definitely check out the Steady Trade team. It's a mentorship program. I work with Mike Huddy. We do twice daily webinars every single trading day. I think it's a great way to really learn this niche. All right. So we're going to talk about the 3 things to consider before scaling up. I mean, I know it's not fun. I know I'm conservative. I know I'm the boring gray-haired old man, but I think a lot of things that trip people up, especially right now in these markets, so wild, so much going on. I think a lot of people scale up too early. You know, you make 2 or 3 green trades in a row, or maybe you got a good week or a good couple weeks, and now you're going too big because you haven't made those mistakes. You haven't taken those big losses, and you haven't learned that pain of losing, and you scale up too soon. So let's talk about these things, and I really, really, really want you to focus on these. I think so many, that old saying, run before you know how to walk. And I think that trips up so many people. They want to go too far, too fast, and then disaster. I don't want you to encounter a disaster. All right. First thing we want to talk about is time. I know, especially in today's culture, we want it now. Everyone wants it now. I want the car now. I want the house now. I want the big bank account now. I want the new computer. I want the new iPhone. People will stand in line for a day to get the latest iPhone. Meanwhile, they could wait a day, or wait a week, or wait a month and just walk in the store. Meanwhile, gotta have it now the day it came out. Focus on the long idea. I don't know how old you are. Maybe you're 15, maybe you're 50, maybe you're 90, but think about this as a journey, and it's not a 1 week thing. It's not a 1 year thing. Listen, I know you see all these things online, $1,000 to $1 million in a year, blah, blah, blah. That's extreme outliers. Can it be done? Yes, but it's extreme outliers. The majority of you are going to take years. You probably just closed this video, but the simple reality is it's going to take years. Focus on that longer term idea, and really, 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 if you're not profitable for a year, an entire year, I really don't think you should be scaling up yet. I don't think you've seen enough of the market. Okay, maybe you just started trading in January 1st, 2021. Okay, I'm recording end of February, and wildest 2 months I've seen in 15 years. Okay, it's not hard to be successful in January and February of 2021. Okay, a lot of people are doing really well. So you got to have that year, I think, to see up markets, down markets, sideways markets. A lot of times, summer, particularly August, there's just not much going on. So you got to get that entire snapshot of an entire year, and even that is probably too short. But I feel like if I told you it was 2 years or 3 years, again, you definitely close this window. All right, at least a year, please, before you scale up. Next thing is, are you following your plan? If you say, you can see I've got the big runner, the Reddit Wall Street Bets GameStop. This is spiking again. Let's say you bought it right now at 160 and you're risking VWAP down at 145. If this dips to 145, do you stop? Okay. When it hits your stop, do you move on? Do you exit? Or are you adding to losers? Or are you closing your eyes and walking away and holding and hoping that GameStop will go back to the highs? Do you have, diamond hands, and are you refusing to sell even though your stop is hit? And then vice versa, are you sticking to your goal? I think that's something I don't hear talked about a lot. We're particularly talking about really, really, really volatile stocks. And let's say again, your goal is 200 on GameStop. Do you take that profit on a stock that was $50 yesterday and could pull back fast? Or do you get greedy? Is your plan to take profits at 200 and then it hits 200 and you start thinking, well, what about 220? What about 250? What about 300? What about 1,000? Okay? A lot of people make that mistake and turn winners into losers by getting greedy. So, are you sticking to your plan, stops as well as goals, religiously? If you're letting stops slip, I'm telling you, very last thing you should do is size up. I mean, if you're trading 100 shares of GameStop or 10 shares and your stop slips on these volatile stocks, last thing you should be doing is trading 500 or 1,000 shares. Next thing, and this is, I think, one of the most important ones, and that's why I saved it for last, is think about trading with the house's money. Okay, if you're a gambler, poker player, you might be familiar with this term, but what I want you to do is focus on that point where you're not having to take income or savings to fund your trading account. Okay, now at the beginning, you got to start somewhere. Okay, pick that number, whatever that number is that works for you to start your account. But if you're having to add capital from your savings, from your job to supplement your account because you're taking losers, it's bad. Okay, things can get real bad. What I want you to do is get to that point where you're consistent. And let's say you started your account with 10,000. Okay, it's kind of maybe a big number, but let's just say that's the number. You start with 10,000. I want you to get to the point where you've got at least $10,000 worth of profits, because now that's that house's money. Just like if you go to the blackjack table and you bet that $100 and you turn it into 200, put that $100 back in your pocket. Okay. That way, if things go bad, if you get stuck in a halt, if some bad news comes out, or again, maybe just that bad discipline and you take that big loss, you're back to that initial capital. Okay. So let's say you do that. You turn your 10 into 20 and you take that brutal $10,000 loss. Ugly day, terrible day. At least you're back to where you started. Okay. So that's one of the biggest things that I think is super important. And again, maybe it's a bigger number. Maybe it's 10 to 100 or whatever that is, but get to the point, big thing, where you're trading with house's money. Because if you can't take money from the market, you shouldn't be taking it from your checking or your savings or your income. All right. But approach this as a professional. It's like a business. I mean, when I started my business 25 years ago, whatever. Yeah, 25. My business partner and I, we were young guys. We didn't take $1 out of that business until it was profitable and we had money coming in. Then we started taking small, enough to pay rent, basically. But think of it like a business. Get that business operating, get positive cash flow, then start scaling up. All right, everyone. Hopefully you enjoyed this video. These are all kinds of ideas we talk about in the Steady Trade team every day. That's the great thing about the product or about the mentorship program is live every day, twice a day. I mean, hours a week. So we really cover everything, whether that be psychology or filings or charts or interpreting news or all these things, trade plans, or again, scaling up. All these things we cover because it's hundreds of hours of instruction every year. And there's an archive of 2,500 and counting webinars. Check out the Steady Trade team, and I'll see you on the next video.